Hello, I'm Greg Gilles, the editor of Unquote, the European private equity publication. We're at the last day of the IPEM conference in Cannes today, and I am joined by Vercoutere from LGT Capital Partners. Thank you very much for taking the time to be with us today.
You're welcome, Greg.
On the last day of the conference.
Yes, it's getting a little quiet. I think the weather, everybody's out now.
Absolutely, it's beautiful out there. But while you're here, I thought we could perhaps start talking a little bit about secondaries, which are obviously part of what you do at LGT. You cover the asset class across the board, but I know secondaries have always been a point of focus for you guys. That particular corner of the industry has developed significantly in the past few years, as everyone knows. Do you think we're now at a point where the liquidity profile of private equity is changing in a radical way, in a transformational way, or do we still have some way to go?
I mean, there's no doubt the secondaries market has grown tremendously over the last few years, and I think it's a combination of two factors. One, the sheer liquidity in the private equity market. Second, the acceptance that private equity investors can actually go out and manage their portfolios and seek out to sell parts or all of their private equity assets and get liquidity. It's a tool today, it's well accepted. It was not always the case. The industry today is about $80-90 billion. It's grown tenfold in the last more than 10 years, in the last 10 years. That being said, I'm not sure that we will continue to see that level of growth going forward. I think it's a factor of where we are in the cycle. If you look at the private equity industry, it's a 40-year-old industry. I was just looking at some numbers. In the 80s, it was about $70 billion of private equity capital raised. In the 90s, it was about $500 billion, so 7x. In the 2000s, about $3 trillion, so another 6x. And in the last cycles, in the 2010s, it was about $6 trillion, so it's about 2x. So we can see that the growth has actually starting to taper. I mean, those are big numbers. Out of 6 trillion today, if we look at the private equity industry, it's about $4 trillion of net asset values. There is need for liquidity on those assets. We've seen actually last year that distributions have started to come down from 2018. And so that is also fueling the desire by investors that have been investing over the last 10 years that provided the growth to private equity to look for some liquidity. Okay. And there is plenty of secondaries capital out there to absorb those private equity assets. That being said, the overhang of secondaries capital compared to deal flow is actually not that large as we look at 2019. It's less than 2 years. So it's been a good market. It's really a liquidity solution for limited partners. Now we're starting to see the secondaries market evolve into also liquidity solutions for general partners, the GP-led restructurings. That's become about 25% of the secondaries market. And we're active in all those segments.
But of course, you're also active on the primary side, and that remains a big focus for you.
Absolutely.
How do you sort of manage the interplay between the two, the primary side and the secondary side, and what sort of trends are you seeing? I would imagine you did a bit more secondary. That proportion has probably grown a bit more in the past few years, but primary would still be a big focus.
Primary continues to be the bigger part of our business actually. So about 50-60% of the capital we invest annually is still primary capital. So we have a lot of primary capital still to deploy in the market globally, US, Europe, and Asia. And that's really very important also for the secondaries platform, because obviously we have exposure to a lot of general partners, we have exposure to a lot of private equity funds. Very often we like to buy things that we know. About 75% of what we buy in the secondaries market are funds managed by general partners that we have in our portfolios.
But obviously you will use the primary side and the secondary side as two different tools in your toolkit, so to speak. What does each get you and your investors, and how do you do the interplay?
And the primaries market is a much longer term market. I mean, at the end of the day, you invest in a blind pool. So you back a general partner that will follow a strategy that's been clearly laid out, a strategy that they've consistently applied in the past successfully. So you expect them to carry that out going forward, but you don't have a view on the assets at the time of your investment. It's longer term. You have an opportunity to also get a higher multiple on your capital invested. When you look at the secondaries market, is you're buying into assets. You still have a portion very often of uncalled capital, but for more intent and purposes, what you buy is 60, 70, 80% funded. If you do a GP-led restructuring, it's very often 90% plus funded. So it's really about evaluating the assets, pricing those assets to get to a return. Now, what's happened in the secondaries market is that underwritten return has continued to come down. And so we're looking for more, I would not say more difficult assets, but maybe assets where the information is not as readily available, where we might have the information on those assets and can underwrite it better than other participants in the marketplace because the information is not as widely available. And so a lot of what we buy tend to be the middle end of the market, the middle market transactions. We will look at large portfolios, but we'll always try to carve out a subset of that portfolio or a few lines.
Because one of the corollaries of that development of the secondary side is that it's now become more transparent, isn't it?
Well, the whole private equity industry has become very transparent.
You need to find an edge.
Yeah, absolutely. Yeah, but information is still an edge in private equity. It's not as obscure, maybe the information as 10, 20 years ago, but there's still some advantages to be had in getting some extra information or better insights, I would say, rather information, better insights into companies or into general partners.
And perhaps as a passing question, we've talked about secondaries, which is a big development of the market. Are there any other trends that at LGT you're really keeping a close eye on as we enter the next cycle, within the next 3 or 4 years? What are the main key points of focus for you?
I mean, the private equity market has developed so much. And we all talk about the private equity market, but in a way there are many segments of the private equity market. There is a very large end, the middle market, and then there is a smaller end of the market. And we try to participate in all the segments. I mean, we're of a size, we're big, but we can also be nimble enough to participate in the smaller end of the market where we can find some really attractive investment opportunities. So we always look for different opportunities. We try to scan really everything that the private market can offer us across geographies, so from venture to large buyouts. We talk about the secondaries market, really a tool, a liquidity solution for limited partners. We're exploring actually situations where it's a liquidity solution to general partners. And you have situations, if you think about a general partner, I mean, if we think about the $4 trillion of assets unrealized in private equity, I mean, general partners have a few tools they can use to obtain liquidity. Obviously, it's hold versus sell, but they can do debt recaps, they can take a company public, and actually there is also the ability for them to do equity recaps. And now we're looking at some opportunities in that segment where we can provide partial liquidity to a general partner on some of their assets. They retain control, we become a minority investor in the company alongside them and provide a solution for them, a liquidity solution. So it's another, I would say it's another tool in the toolbox for private equity investors.
Creativity, the name of the game.
You have to, and the market constantly changes. It's always been very competitive. It is very competitive, and we need to differentiate our capital. We need to make our capital attractive, differentiated, and look maybe in areas that are not as well covered.
Absolutely. Thank you very much, Yvan. Really good to catch up with you, and thank you very much for watching.
Thank you very much.